In today's show, what's next for Bitcoin and the crypto market now that the Ethereum merge is over? In today's show, I'll be sharing the possible new trends that will drive the crypto market in the post-merge era. And quoting Robert Kiyosaki, savers are losers. 25 years ago, in Rich Dad Poor Dad, I stated savers are losers. Today, U.S. debt is hundreds of trillions of dollars. Real inflation is 16%, not 7%. Fed raising interest rates will destroy the U.S. economy. Savers will be the biggest losers. Invest in real money, gold, silver, and Bitcoin. And this just in, the Bitcoin hash rate hits a new all-time high. And quoting Max Kaiser, Bitcoin is a global insurrection against banker occupation. Those fighting on the side of life, liberty, and Bitcoin are freedom fighters. Also in today's show, Ethereum pullback is about to end, says crypto trader who predicted the 2018 Bitcoin bottom. Quoting Smart Contractor, we're in the final innings of this ETH correction, correcting the rise from July. Have been mapping this out step by step since August's top. Only 10% or so more down to go before we begin to look for long-term buys. Also in today's show, Bitcoin can nuke if one critical support level crumbles, says top crypto strategist, quoting Michael Saylor. If we lose 19,300, the chances are that we are going to go briefly beneath 18,500 and make new lows. Also in today's show, Ethereum merge will drive crypto asset prices higher, according to DeVere CEO Nigel Green, and he explains why. That's right, according to a new company blog post, DeVere CEO says that ETH's merge is a landmark historic moment that will serve as a long-term catalyst for the digital asset industry. Also in today's show, Bitcoin is better than physical property for commoners, says Michael Saylor. That's right, quoting him here, if you have a property in Africa, no one's going to want to rent it from you if they live in London, but if you have $1 billion of Bitcoin, you can loan it or rent it to anybody in the world. Bitcoin represents a property that you can acquire in small pieces so that you can carry it with you anywhere you go. You can give it to your children's children, and in 250 years, maybe your family still owns the property. We'll also be discussing his Bitcoin price prediction going into the millions. Quoting him here, there is no price target. I expect we'll be buying Bitcoin at the local top forever, and I expect Bitcoin is going to go into the millions. So we are very patient. We think it is the future of money. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So if you like receiving daily premium crypto news alerts every single day, including weekends just like this, make sure you subscribe to the channel, hit that bell to turn on all notifications. Will Smith that like button and drop a comment right down below, as it helps out tremendously with the YouTube algorithm. And today's episode is brought to you by iTrustCapital, the #1 crypto IRA platform in the world. They recently released their staking product, and you can now stake Polkadot tax-free with a crypto IRA, truly making iTrustCapital a no-brainer. And you can also buy, sell, and trade 25 of the top cryptos, including precious metals, gold, and silver. There are no monthly fees and only 1% transaction fees. They offer institutional-grade storage, and you can get started today and open your account with only $1,000. And if you sign up today using my referral link in the description below, you're going to receive a $100 reward in Bitcoin. So go ahead and set up your crypto IRA account today with iTrustCapital, and let's get this crypto tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and welcome to podcast episode number 1050 of the Crypto News Alerts pod. The Ethereum merge came and went, leaving investors to ponder what the next trending development in the market could look like. So here are the potential scenarios post-merge. Number one question, where will the former Ethereum miners go? The Ethereum network successfully shifted to a proof of stake, meaning miners are out of pocket but can still possibly be in possession of their GPUs and ASIC mining infrastructure. It is possible that some miners might elect to mine on a different chain instead of selling all of their gear. Where is it all going to go is a great question. While they haven't settled on any particular chain just yet, Ravencoin, Flux, Ethereum Classic, and Ergo seem to be the front runners leading into the merge. Each network saw its hash rate rise to new all-time highs. As shown here, you can see Ethereum Classic all-time high, Ergo's hash rate all-time high, Raven's hash rate all-time high, and Flux all-time high. Prices of each altcoin also rallied over the past month, with Ravencoin up 169%, Ergo added 132%, while Flux gained 156%, with Ethereum Classic gaining 135%. in the past 90 days. Now let's discuss Cosmos continuing to expand. Their ecosystem continues to expand, which appears to be attracting buyers to Atom. Since bottoming out at $5.50 on June 18th, Atom's price has gained 137.5% and is currently trading above $16. Analysis suggests that investors view the soon-to-launch liquid staking, Atom being used as collateral for stablecoin minting, the launch of Cosmos Hub 2.0, and the eventual recovery of decentralized finance in general as a bullish long-term factor for the Atom price. Next up, buy the rumor and sell the news, or is it buy the dip? While Ethereum's current price action is less bullish than merge supporters and ETH bulls might have hoped, the actual shift to a proof of stake appears to have been a success, and perhaps over time, the benefits of proof of stake will translate to a bullish price action for Ethereum. And according to Jarvis Labs co-founder Ben Lilly, the Joe Cool move for Ethereum investors is not to get caught up in the days to come. The main player that is likely to do any sort of crazy activity is that of the miner, and that's a one-off event that is likely to be short-lived. So in the future, Ether could experience a supply shock and possibly become deflationary. In a market that is stuck in a downtrend, sourcing a safe, predictable yield could become more attractive. So essentially, Lilly is suggesting that it will take time for the fervor surrounding the merge to settle and for investors to begin capitalizing on the benefits that the proof-of-stake Ethereum network could offer. Now, what about Bitcoin? In this week's Bitcoin analysis, we discussed not much has really changed with the Bitcoin price action. Its price has remained range-bound in the $17,600 to $24,400 range for the past 3 months, and all of the rallies are out of the range high since March 29th and have capped by the 200-day moving average and an overhead resistance trend line that extends from Bitcoin's November 2021 all-time high of $69,400. And while continued consolidation within the current range could and would typically be good for alts, macro tensions may continue to weigh on the crypto and equities markets. The hot consumer price index print from September 12th could lead to more aggressive rate hikes from the U.S. Fed, and the potential knock-on effect on stock prices could have an even sharper spillover effect on the crypto prices, and for this reason, investors remain largely risk-averse to most cryptos, and it is possible that repeat rejections at the long-term descending trend line and further retest of the $19,000 support could eventually result in a breakdown below the yearly swing low. And quoting Rich Dad Robert Kiyosaki, "Savers are losers 25 years ago, and Rich Dad Poor Dad, I stated savers are losers today. U.S. debt is hundreds of trillions of dollars. Real inflation is 16%, not 7%. Fed raising interest rates will destroy the U.S. economy. Savers will be the biggest losers. Invest in real money, gold, silver, and Bitcoin." So there you have it. Let me know if you agree or disagree. We're Rich Dad. I agree in the Bitcoin part. Buy Bitcoin and keep stacking them sats. And this just in, Bitcoin hash rate hits yet another new all-time high. Let's freaking go. And quoting Max Kaiser, "Bitcoin is the global insurrection against banker occupation. Those fighting on the side of life, liberty, and Bitcoin are freedom fighters." Touche. And before I break down next story of the day, Ethereum pullback is about to end, says crypto trader who predicted the 2018 Bitcoin bottom. But first, let's take a quick look at the overall crypto market. You can see Bitcoin up almost 1% for the day, trading at around $19,900, right around that 20K psychological resistance. We have XRP up a whopping 12%, trading at 36.8 cents, while Ethereum is currently correcting down 2% for the day, maintaining just above $1,400, while Binance Coin, Solana, Polkadot, Avalanche, and Cardano are all breaking out and in the green. But all right, now let's break down our next story of the day. The crypto strategist who nailed Bitcoin's 2018 bear market bottom says that Ethereum is likely in its final stages of its downtrend. Synonymous crypto strategist, smart contractor, tells his 210,000 Twitter followers that Ethereum is close to completing its final leg down before turning bullish. Smart contractor predicts that Ethereum will fall to around $1,200 by next month before rallying towards its target above $2,000. As he shares here on crypto Twitter, we're in the final innings of this ETH correction, correcting the rise from July. We have been mapping this out step by step since August's top. Only 10% or so more down to go before we begin to look for long-term buys. Now, smart contractors, known in the industry as one of the top practitioners of the Elliott wave theory, a technical analyst approach that attempts to predict future price action by following crowd psychology that tends to manifest in waves. According to the analyst's chart, Ethereum is in the midst of a wave C down, which he believes would set the stage for a new leg up. Last month, when Ethereum was trading around $1,600, smart contractor predicted ETH would print a lower high around $1,800, which is the B wave, this month before establishing a local bottom for the next rally. And so far, Ethereum appears to be following the analyst's script. As he shared last month on August 21st, looks like the larger ABC correcting the 5-wave rise has begun on ETH. This looks like an A wave for now, expecting a bounce that ends up being a lower high soon. 1300 is still the spot to look for buys, in my opinion, provided the structure looks right when we get there. So lo and behold, with Ethereum currently trading at around $1,400, we're only 100 away from his target. Let me know if you agree or disagree with the crypto analyst. And before I break down next story of the day, Bitcoin could nuke if one critical support level crumbles, says top crypto strategist. But first, let's take a quick look at the overall crypto market cap, sitting just under that $1 trillion milestone with $60.5 billion in volume. In the past 24 hours, the current Bitcoin dominance is 39.5%, with the Ether dominance still on the decline at 18.1%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Terra Classic leading the pack, up 16%, trading at virtually nothing, followed by Terra Luna, up 14.5%, trading at $3.13, followed by XRP, up 11.5%, trading just under 37 cents. And checking out the top 100 cryptocurrency gainers in the past week, you can just see a sea of red as altcoins have taken a major hit this week. We have Ethereum Wrapped down 72.8%. We got Luna down 52%, Luna down 52%, and Luna Classic down 27.4%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated at 22 out of 100 in extreme fear. Yesterday at 20, last week at 28, and last month at 30 in fear. But all right, now let's break down our next story of the day. A popular crypto analyst is outlining what level Bitcoin needs to hold in order to avoid plunging further in price. In a new YouTube video, top crypto strategist Michael Saylor tells his 165,000 subs that Bitcoin needs to hold around 19,300 in order to avoid a nuke. Quoting him here, because if we lose 19,300, the chances are that we are going to go briefly beneath 18,500 and make new lows, especially after the last candle. That's going to be hard for us. This is the final support, and if this support doesn't really hold or provide any support at all, it is very likely we're going to nuke furthest downward towards 17,005 to 18,500, and then we're going to seek for support there. Now, Van de Pop notes that Bitcoin will likely not make a major move until the U.S. Federal Reserve meeting next week, when traders and investors will get more info on the direction of risk-on assets like Bitcoin and crypto. As he shares here, next week is the Fed meeting. I will not be surprised if we just continue sliding a little bit or consolidating until we get the feel from the Fed. Let me know if you agree or disagree with Van de Pop. And to watch this video he did entitled Bitcoin Dropped to 17,500 Before Fed Meeting, check the show notes below the video in the description. And before I break down next story of the day, Ethereum merge will drive crypto asset prices higher, according to DeVere Group CEO Nigel Green, as well as Bitcoin is better than physical property for commoners, says Michael Saylor. And I share with you his multi-million-dollar Bitcoin price prediction. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,300 plus videos right here on my YouTube channel. If you're not already subscribed to the channel, you know what to do. Hit that bell icon, turn on all notifications, Will Smith, that like button, and drop a comment below. I greatly appreciate your continued support. But all right, now let's break down our next story of the day. The chief executive of financial advisory giant DeVere Group says that Ethereum's recent transition to a proof of stake should drive up the prices of crypto assets. According to a new company blog post, DeVere Group CEO Nigel Green says that Ethereum's merge is a landmark historic moment that will serve as a long-term catalyst for the digital asset industry. Quoting him here, the years in the making merge, a network-wide grand-scale upgrade, is here. This is a far-reaching overhaul of the most commercially important blockchain in the digital asset ecosystem. Is probably the most important landmark even in crypto history since the launch of Bitcoin. It transforms Ethereum from a proof-of-work to a proof-of-stake mechanism, which lowers transaction costs, enables the network to process more transactions in a shorter amount of time, and will slash energy consumption by a massive 99%. And according to Green, the merge's reduction of energy consumption will entice institutional investors to put their capital into the nascent industry, as he shares here. While some of the news has been priced in already, let there be no mistake, this event will be a major catalyst driving prices higher. In the long term, the slashing of energy consumption will be the main reason, as it will become significantly more appealing to institutional investors who bring with them enormous capital, expertise, and reputational pull. Those institutional investors who have been sitting on the sidelines are now likely to move in. Let's freaking go. And Green also notes that Ethereum's transition will reduce its supply, cut costs, and speed up transactions, which will also lead to bolstered prices, as he shares here. Besides having a more positive climate impact, the merge's effect of reducing supply, cutting costs, and speeding up transactions will also appeal to both individuals and institutions. Due to the significance of the merge, we expect the developments to bolster prices across the wider crypto market to some degree. So there you have it. Let me know if you agree or disagree with the CEO of the DeVere Group, Nigel Green, that the crypto market will likely have a positive impact post-merge. But now let's break down our next story of the day. MicroStrategy CEO and Bitcoin advocate Michael Saylor, the one and only, doubled down on his support for Bitcoin as he explained the issues related to transferring the value of physical properties such as gold, company stocks, or equity and real estate during the Australia crypto convention. Speaking about the underlying proof-of-work consensus mechanism, Saylor highlighted that Bitcoin is backed by $20 billion worth of proprietary mining hardware and $20 billion worth of energy. He then pointed out that traditional assets such as gold in high quantity and land are nearly impossible to carry forward across geographical boundaries, adding the following: if you have a property in Africa, no one's going to want to rent it from you if they live in London, but if you have $1 billion of Bitcoin, you can loan it or rent it to anybody in the world. Facts. And Saylor further underscored the high maintenance costs and taxes linked with owning the inherited physical property over the long term, which in case of Bitcoin does not exist. Geopolitical tensions across the world also determine the type of assets one would be allowed to carry forward across jurisdictions. As he shared here, Bitcoin represents a property that you can acquire in small pieces and that you can carry with you anywhere you go. You can give it to your children's 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 children, and in 250 years, maybe your family still owns the property. That's right, because one Bitcoin can be divided by 100 million Satoshis. And according to Saylor, only royalties such as King Charles III have the liberty to pass down their wealth without worrying about being taxed away unless it's Bitcoin. The entrepreneur reiterated that the Bitcoin network has not been hacked for over 13 years and is currently the most secure network in the world. Preach. And on an end note, Saylor emphasized the regular upgrades being made on the Bitcoin network to make it faster and more secure, along with innovations around Layer 2 and Layer 3 applications. And Bloomberg analyst Mike McGlone recently opined that Bitcoin is a wild card that is well positioned to outperform stocks as traditional finance inches towards a recession. McGlone took it to social media platforms, including LinkedIn and Twitter, to state Bitcoin is a wild card that's more ripe to outperform when stocks bottom, but transitioning to be more like gold in bonds. Now let's break down Michael Saylor's multi-million-dollar Bitcoin price prediction. During a recent interview with Yahoo Finance Live, Saylor shared the following: there is no price target. I expect we'll be buying Bitcoin at the local top forever, and I expect Bitcoin is going to go into the millions. So we are very patient. We think it is the future of money. And as I shared in yesterday's episode, Saylor also predicts a $100 trillion crypto market cap. So let's just run the numbers. If we were to hypothetically 100x from here, saying that the crypto market cap is currently sitting at roughly $1 trillion, 100x the current Bitcoin price of around 20,000 is a $2 million Bitcoin price prediction. Let me know when you feel the Bitcoin price is likely to reach that $2 million mark. And quoting him again here, once people figure out why Bitcoin is superior to everything else, then the institutions are going to come in with large sums of money, and we are not going to have to struggle through this massive explanation why we're different than 19,000 other crypto tokens. And the MicroStrategy executive also affirmed that Bitcoin is the future of money, but to scale up to its ability to achieve billions and billions of transactions, it needs to have an ethically, economically, and technically sound base layer and second layer like the Lightning Network, which we have. So there you have it. What are your thoughts surrounding Michael Saylor's multi-million-dollar Bitcoin price prediction? Holla at your boy in the comments below. Now for the top 3 comments from yesterday's episode. eCoin wrote, Aloha Friday JV. Great show to end the week. So stoked the weekend is finally here. Have a good one, bruh. Chronic Surf, as always, fam. one love. And our next featured comment comes from Nate, who wrote us a story. So I'm just going to read a small portion. Thanks again, JV, for the great update. Who the heck does the Biden admin and leftists in the government think they are, telling free people what they can and cannot do with their own money, or how they can transmit that money? It's none of the government's dang business. And I think conflicts with the honest reading of the U.S. Constitution. I agree 100%. And our third and final featured comment comes from Pezza. Love it. Michael Saylor and Max Kaiser open their mouths, and politicians look stupid. Digital dollar replacing Bitcoin? They will never take our freedom. Inflation has only just got started. Bitcoin is the place to be. We are early, guys. Keep stacking and start packing. El Salvador, here we come. Let's freaking go. And to be featured on tomorrow's episode, drop a comment right down below. Make sure you turn on all notifications. Will Smith that like button, and I look forward to seeing you on tomorrow's episode. Peace.